Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Today, we're taking a really close look at the recent Q2 2025 earnings call from Robinhood Markets, Inc. That happened just back on July 30th, 2025.
Right?
Robinhood, well, as I'm sure you know, they're always making headlines, always sparking conversations in finance, often kind of challenging how things are usually done.
Definitely.
So our mission today really is to get past those headlines, maybe cut through some of the noise or assumptions, and pull out the really crucial insights, maybe some surprising facts, and the key strategic moves directly from what the company said on that call.
Yeah.
Think of this as, your shortcut to understanding their strategy, their growth, which is really accelerated, and their, well, pretty ambitious vision for where finance is headed.
And it's really key to get what these earnings calls actually represent. They're not just, reading out numbers.
No, not at all.
It's a direct line. You hear management's own take on how they did, what they think they're doing well, maybe where they see challenges, and crucially, their plan going forward. And everyone's listening, analysts, investors, the media, they're digging into every word, every answer, looking for those little shifts, maybe potential problems or those opportunities that don't always make the press release.
Right.
The kind of detail we can pull from these calls gives you a much, much richer picture of where a company's really heading compared to just, glancing at the financials. It gets right into the operational heart.
Exactly. So, okay, let's unpack this for you. We're going to start by looking at Robinhood's Q2 performance. And honestly, the numbers are stellar. They really paint this picture of accelerating growth, maybe even some newfound maturity.
Yeah, they really do.
Then we'll broaden out a bit, look at their ecosystem, how it's growing fast. We'll dig into their product innovations they're doing here, but also their big push globally.
That global piece is interesting.
It is. And finally, we'll tie it all together. Look at that long-term vision. It seems heavily focused on diversification, being financially disciplined, and this big bet on, well, what they call the tokenized future of finance. Should be pretty interesting.
Definitely a lot to cover there.
So let's jump right into that Q2 performance because, yeah, the numbers are impressive. They certainly got the market's attention. Robinhood reported revenues just shy of $1 billion for the quarter.
Wow, almost $1 billion.
Yeah, and that's up 45% compared to the same time last year. Big jump.
45% year over year is significant growth.
But maybe even more telling, their earnings per share, the EPS, it actually doubled compared to a year ago.
Doubled.
Doubled. That's not just steady growth. That's like, hitting the gas pedal.
Yeah.
It feels like something fundamental has really shifted in how they operate.
It absolutely has. And when you look underneath those headline numbers, you see how they did it. And it's a story of really impressive operational efficiency and discipline. They reported, get this, 81% incremental adjusted EBITDA margins.
81%.
Yeah, 81. And overall adjusted EBITDA margins were really strong too at 56%. Now, that 81% incremental figure, think about it like this. For every new dollar of revenue they brought in, 81 cents dropped straight to their adjusted bottom line, essentially.
That's incredible leverage.
It's astonishing. It tells you their core setup, their infrastructure, it's super efficient. It can handle way more revenue without costs ballooning alongside it. That kind of leverage, that's what you look for in a scalable business model.
Right.
And it suggests, a real maturity in managing their finances. They were very clear their adjusted operating expenses, even including stock-based comp, only went up 6% year over year.
Only 6%. When revenue's up 45%.
Exactly. That disconnect is huge. It shows this laser focus on profitability and this powerful ability to turn that top-line growth into better margins. It really shows someone's got a firm hand steering the ship towards, sustainable, profitable growth.
And it wasn't just the revenue and profit side. The growth in customer assets was also pretty staggering. It really challenges maybe some older ideas about who uses Robinhood.
Yeah, what do they say on that?
Total customer assets doubled year over year. Doubled. They're now sitting on over $250 billion.
$250 billion. Wow.
And for the first time ever, the average assets per funded customer broke $10,000. That also nearly doubled from a year ago.
Okay, that $10K average is a big milestone.
It feels like it. I mean, I remember the narrative not long ago was, it's for smaller accounts, maybe newer investors, maybe more speculative money. These numbers just blow that idea up. It shows they're capturing a much bigger slice of their customers' overall wealth.
That shift in average assets is, it's a critical indicator. It really speaks to, like you said, deeper trust, more engagement. customers are seeing Robinhood less as just a trading app and maybe more like a primary financial partner.
So what's driving that? Just new users.
Well, new users help, but what's really fueling it is this consistent, strong flow of net deposits. Q2 was their third highest quarter ever for net
Oh,
deposits.
third highest ever.
Yep. And it was the sixth quarter in a row where they brought in over $10 billion in net deposits.
6 quarters straight. That's momentum.
Huge momentum, and it's not slowing down. They said they saw around $6 billion in net deposits just in July. So they're on track to beat last year's record of $50 billion for the whole year.
For $50 billion in a year.
Yeah. And strong net deposits like that, it means existing customers are actively moving money in. They're consolidating assets, maybe from other banks or brokers, trusting Robinhood with bigger amounts. That deepens the relationship, makes customers stickier, and really shores up those recurring revenue streams, makes them much less vulnerable to just market swings.
And it's not just assets sitting there,
Yeah.
right? People are actively using the platform. The activity levels were also hitting records.
Right, the trading volumes.
Yeah, they highlighted record trading volumes across a really wide range of things now. Not just stocks. We're talking equities, options, sure, but also their prediction markets, index options, even futures.
That diversification is key.
Definitely. Like index options volumes jumped 60% just from Q1.
Yeah.
And those event contracts, the prediction market things, they more than doubled to nearly $1 billion in volume in Q2.
$1 billion in volume on event contracts.
Yeah. That kind of breadth, that depth of activity, it suggests a really vibrant user base doing lots of different things. They're clearly appealing to a wider range of financial interests now.
And that diversification in what people are trading is so important for building a more, resilient business. They're clearly moving way beyond just being seen as a stock and options place.
Right.
The fact that these newer products like futures and prediction markets are taking off so quickly, it shows they've found product market fit there. It expands their reach.
Makes them less reliant on just one thing.
Exactly. Less susceptible if, say, stock trading cools off for a bit. They mentioned July started strong too. Equity and options volumes set new monthly records, and even crypto volumes were at 6-month highs. So these newer areas aren't just side projects, they're really contributing now, building a much stronger, multifaceted base.
Okay, here's where it gets really interesting, I think. Because this volume growth, this deeper engagement, it's not just happening on its own. It seems directly linked to how they're expanding their whole ecosystem with new products and this pretty ambitious global push they're making.
Yeah, connecting the dots there is important.
So one thing that really stood out on the call was Robinhood Gold, the premium subscription. It's really taking off.
The numbers were pretty impressive there.
Record 3.5 million subscribers. That's up over 75% year over year.
75% growth in subscribers is massive.
And what caught my eye was the adoption rate for new customers in Q2. Over 35% of people signing up went straight for Gold. They're seeing the value right away, it seems.
Well, and that speaks to their strategy for gold, right? They basically said they want it to be an obvious choice for pretty much everyone, like a core part of the experience,
How are they making it obvious?
by constantly adding more to it, beyond just trading perks. Think about the gold cash sweep balances. There are over $30 billion now.
30 billion.
Yeah, up 10x in less than 3 years since they rolled out that high-yield offer. Then there's the gold card. Over 300,000 cardholders now, tripled just since the start of the year.
Tripled this year. Wow.
And they're adding exclusive stuff like Cortex, those stock digests. Hundreds of thousands of gold members are using it. So they're benchmarking gold against things like, Amazon Prime.
Oh, okay. So integrated, almost essential.
Exactly. Make it so valuable, so integrated that active users just feel like they need it. It builds loyalty, increases that lifetime value.
And at $5 a month, if they keep packing in value like high-yield cash and card rewards, well, you can see why they think it's maybe the best deal in finance.
It's a compelling bundle, for sure, especially if you use multiple features. If you have cash benefiting from the sweep, use the card, want the research tools that $5 pays for itself really fast,
Yeah.
it really aims to shift the relationship from just transactions to something deeper, more recurring. Embed Robinhood into your daily financial life.
And speaking of embedding deeper, they're making a huge move into more traditional banking and lending territory.
Robinhood banking.
Yeah, launching this fall. And their vision sounds really ambitious. They use the phrase private banking experience, but for the mass market. All digital,
A digital private bank.
kind of. They mentioned a whole suite of things. High yield, of course, but also estate planning tools, ways to link and track all your outside accounts, net worth tracking, even some kind of innovative cash delivery they're testing internally.
Cash delivery. Interesting.
It sounds like they want to be the place you manage basically everything financially.
And this push into banking and lending has, well, pretty big strategic implications. It's important, though, to note how they're doing it. They're using partnerships.
Right. Not becoming a bank themselves.
Exactly. Partnering with Coastal Community Bank for the banking stuff, Sage Home Loans for mortgages. This lets them offer competitive rates without all the heavy regulation and capital needed for a bank charter.
Smart.
And it offers perks like potentially higher FDIC insurance limits through multiple partner banks for the cash sweep. And it gives Gold members easy access to lending products like mortgages.
Are they seeing success already in lending?
Well, yeah, in securities lending, definitely. They generated $54 million just in June from that.
$54 million in 1 month.
Yep, up 160% year over year. And they said July was strong, too.
Yeah.
It's driven by more customers signing up for margin and just generally using those credit features more as their margin book grows. So by adding these more traditional but digitally delivered services, they're not just adding products, they're strategically aiming to grab a much bigger share of their customers' total finances, become that primary partner, not just the trading app.
It really does make you wonder, right?
Yeah.
As they add checking, savings, maybe mortgages,
Yeah.
how does that change what Robinhood is? Is it still a brokerage first? Or does it become more like a digital bank that also has great investing tools?
That's the big question about their future identity. Absolutely.
And this expansion drive isn't just about products here at home. They're making a really clear push globally, too.
Yeah, the international angle's getting serious.
They've expanded their European offering now to 30 countries. They said that potentially reaches over 400 million people.
Huge potential market.
And crucially, that Bitstamp acquisition, the crypto exchange, it's officially closed now.
Right, that's a big deal.
Yeah, it immediately brings in over 600,000 international customers. Plus, Bitstamp has a growing institutional business side, too.
And acquiring Bitstamp is, well, incredibly strategic for that international growth and for getting into the institutional crypto game faster.
How so?
Well, buying an established, respected exchange like Bitstamp, one with a big international footprint and existing institutional clients. It's not just about adding users. It gives them a ready-made foothold in different regulatory environments around the world.
Navigating regulation.
Exactly, and it lets them tap into that institutional crypto market, which is a different, often higher value segment. They explicitly said these international customers are becoming a bigger and bigger part of the business.
Okay.
It shows they're serious about moving beyond just the U.S. They want to be a truly global financial player, and they seem to be using digital assets, crypto, as a key way to accelerate that expansion. It's about scale, diversifying revenue geographically, and grabbing users in this evolving global landscape.
And sticking with crypto and that global reach, it feels like the future they're painting is heavily, heavily tokenized.
Yeah, they're placing some big bets there.
Starting with these things they call stock tokens. They actually called them potentially the biggest innovation in capital markets in over a decade. A bold claim.
Very bold.
They even had this big launch event in France to catch a token. Apparently got over 25 million views. They're clearly putting a lot of marketing muscle behind this.
Well, and the idea of tokenization, especially for real-world things like stocks, it does offer some potentially huge benefits for users, things that could really shake up traditional finance.
Like what?
Think about true 24/7 trading. No more market hours.
Okay, that's big.
Instant settlement, which cuts down risk, frees up capital faster. The idea is self-custody. You actually hold and control your asset directly, not through a broker.
Direct control.
And maybe the biggest thing, opening up access to assets that retail investors usually can't touch easily, like private company shares or fractional bits of real estate.
Right, democratizing access.
Exactly, and they're rolling this out in Europe in stages, which seems smart. Phase 1 is live now, 245 trading, but kept kind of close to traditional market hours to avoid the token price drifting too far from the actual stock price.
Okay, managing risk.
Right. And pricing is competitive. Just a 10 basis point FX fee is the main charge. Phase 2, coming soon, they said, will unlock full 247 trading, likely using Bitstamp's infrastructure.
Yeah, leveraging the acquisition.
Yep. And then phase 3, that's the really revolutionary part, unlocking the full power of DeFi. Non-custodial, hold the token in your own wallet. on-chain transactions.
So trading directly on the blockchain.
Potentially, yeah.
Yeah.
That's the vision. It fundamentally shifts control and ownership, opens the door to this decentralized system where you could trade directly, globally, anytime without the traditional middlemen. It's a massive shift in financial power.
So, okay, if this takes out, phase 3 especially,
Yeah.
what does that mean for just the average investor, not just in Europe, but maybe everywhere eventually? How does that change things?
For the average person, it could be, well, revolutionary. Imagine being able to buy and sell, say, a tiny fraction of a private company you believe in, or maybe even a piece of a specific building, as easily and instantly as you trade Apple stock now, and at 2 a.m. on a Sunday if you want.
Yeah, that's a different world.
It levels the playing field massively, makes these exclusive opportunities way more accessible, cuts friction, costs, waiting times, and that self-custody piece is really empowering true ownership, true control in your hands.
Are there hurdles? Regulatory ones?
Oh, huge hurdles.
Yeah.
Especially in the US. But the vision is clear. Use blockchain to build a faster, cheaper, more accessible, more inclusive global financial system that kind of bypasses a lot of the old, slow, expensive infrastructure. It could really force the old guard to adapt fast or, get left behind.
And building the foundation for all this tokenization is something they call the Robinhood chain.
Right. Their own blockchain.
They described it as the first layer 2 blockchain optimized and built with real-world assets in mind. That sounds very specific.
And building their own layer 2 is a really strategic decision. It gives them a big edge.
Why build your own? Why not use an existing one?
Control and optimization. They can tailor it exactly for what they need, especially for the complex demands of tokenizing real-world assets. It's different from just trading crypto coins.
Right.
And their big advantage, that built-in audience.
The 25 million U.S. customers.
Exactly. With over $1 trillion in assets already on the platform, that's an incredible base to kickstart a developer community around their chain. And they're focusing it specifically on real-world assets, unlike maybe some other chains optimized for, more speculative crypto trading.
Right, the degen traders they mentioned.
Yeah. Robinhood chain is being built for stability, security, scalability, the kind of institutional grade stuff you absolutely need if you're going to bring mainstream stocks, bonds, real estate onto a blockchain. It's a long-term play to control their own tech destiny in this space.
Okay, shifting back to the U.S. crypto market more broadly, they highlighted some definite progress there, too.
Yeah, things are moving.
Mentioned the Genius Act passing, which gives some regulatory clarity. And the launch of staking seemed really successful.
Staking took off fast.
Over $750 million staked in just the first month. And they said they hold about $6 billion in assets that could be staked. So really rapid uptake.
That quick adoption shows huge customer demand for earning yield on their crypto right there on the platform. People aren't just holding, they want returns.
And how are they actually making money from crypto trading now?
They have basically 2 ways now, catering to different users. The older way is the market maker method. They get a rebate, which they recently set at 85 basis points.
Okay.
The newer way is their smart exchange router. This is more for active traders. You pay a small commission, 10 basis points, but you trade directly on exchanges.
Ah, direct access.
Right. And they're seeing that while it's early, the high-volume folks using this router are bringing in more overall volume, getting better prices, and it actually leads to more revenue per trader for Robinhood, even with that lower commission.
Interesting. What about competition? Or the ups and downs of crypto?
They address that. Basically said their fast pace of innovation and the fact they offer so many different products now, not just crypto, makes them less vulnerable. They think they can out-innovate traditional brokers maybe trying to get into crypto now, and they're not solely reliant on crypto trading volume like some exchanges might be. It's about that diversified approach again.
Yeah, it definitely feels like all these new things, gold, banking, global crypto innovations, are making them much less dependent on just one thing, like stock trading volume, which was that old criticism. Really.
Exactly. It directly addresses that point.
Because, yeah, back in 2021, during all that meme stock stuff, people definitely called them a very cyclical business. Fairly or unfairly, that was the label.
It was a fair criticism at the time, based on their revenue mix then, and clearly management heard it and has been working hard to change that reality.
How diversified are they now?
Well, they made a point of saying they now have 9 distinct businesses pulling in over $100 million a year in revenue each.
9 businesses over $100 million.
Yep. And several more like Trade PMR, the advisor platform they acquired, Bitstamp, prediction markets, index options, the gold card, Legend, their institutional offering. Those are getting close to the $50 million annual mark.
Okay, that's significant diversification.
It really is.
Yeah.
And they achieved this even while interest rates have been high, which can sometimes dampen trading. They see that interest income they earn on customer cash now as a kind of natural hedge.
Ah, so if trading slows, interest income might pick up.
That's the idea. It smooths things out. And they actually said on the call, this is probably the least diversified you should ever see Robinhood.
Wow, implying much more to come.
Exactly. It signals this relentless drive to keep adding more, building a much more robust, resilient business that can handle different market conditions without huge swings, less reliance on any single thing.
And connecting that diversification back,
Yeah.
it seems tied to this real strategic discipline in how they run the company and where they put their money.
Absolutely. It's not just random growth.
Because that financial discipline, it really stands out. Expenses up only 6% year over year, while revenue rockets up 45%. That gap is intentional.
It is, and it reflects this core strategy. Manage costs tightly in the existing businesses, but invest heavily where you see high returns.
How do they manage costs so tightly?
They expect their established businesses to get more efficient all the time. Use tech, use AI, they mentioned it in engineering and customer service, to keep cost growth really low, maybe even flat or down.
Okay.
That frees up cash. And that cash then gets strategically plowed back into growth areas, building new products, expanding globally, targeted marketing things where they calculate a high ROI.
So efficiency funds innovation.
Precisely. And their M&A strategy follows the same discipline. They only do deals, they said, that speed things up by at least 18 months versus building it themselves. The deal has to fit the global ecosystem plan, and critically, it has to bring in a great team.
Like the WonderFi deal for Canada.
Exactly like WonderFi. It accelerates their entry there, brings local expertise. This whole lean and disciplined approach, it's like their operational DNA. It's what lets them innovate so fast while staying profitable. It's a cycle.
It definitely sounds like that culture, being lean, being disciplined, is really fundamental to how they're managing this rapid growth and innovation in such a competitive space.
It seems to be. It provides the fuel and flexibility for their ambitions.
So wrapping things up then, the overall feeling from this Q2 call, it's definitely one of strong momentum heading into the back half of 2025.
Yeah, the tone was very confident. And from their view, the potential market out there, the TAM, is just massive. They feel they're just getting started.
What gives them that confidence?
It seems to be the combination of things, the speed they're still rolling out new products, the fact that customers seem genuinely engaged with them, both new and old offerings, and this successful expansion into big new areas like banking and tokenization. It all feeds this belief that net deposits will keep flowing in. The business will keep growing significantly over the long haul. They also mentioned customer happiness, measured by Net Promoter Score, hit a high point.
Okay, happier customers.
Yeah, combined with seeing customers trust them with more money, that higher wallet share, and adopting the new products quickly. It gives them internal validation that their strategy is working and the outlook is strong. They're clearly aiming to build something lasting, integrated, and diversified.
So maybe something to think about as we finish up here. Consider how this company, Robinhood, which many people first knew for just one thing, maybe commission-free stock trading, is changing so fast. It's becoming this really complex, multifaceted financial ecosystem using tech, using diversification. What does that rapid evolution mean for the future of, well, traditional finance? And maybe how quickly do other players, the banks, the older brokerages, need to adapt to keep up with this kind of change? Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.